Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 11th of June 2023. And last week we saw very little movement in the price of gold and silver. However, we expect this following week to be very different. We have CPI figures coming out on Tuesday, and then the Fed's decision on interest rates on Wednesday, and then additional figures including retail sales on Thursday, all of which, together and joined, could have a significant impact on the direction of precious metal prices, the dollar, and also the equity markets too. So let's take a look at what happened last week and what we envisage could very well happen this coming week. Okay, first just a quick reminder and a request. We've set up a second channel entitled Finances Do Matter. We placed a link both in the description box and the comments section below. In just a couple of months, we've achieved over 5,000 subscribers. We have 90 plus videos on that channel. And once we reach 10,000 subscribers, we're targeting to achieve by around September. We'll embark on a number of interviews and live streams. So if you're one of those listening who hasn't yet subscribed, please make sure you do so. Meanwhile, going back to what happened last week and what we expect to happen this coming week, well, gold rose $13, rising from $19.48 to $1,961. It's been as high as $19.73 and as low as $19.38. A lower high and a lower low than the previous week, a rise of just 0.7%. In sterling terms, it finished at £1,560, that's down just £8, and in euros it closed at €1,826, that's up €6. A bit more excitement in the silver market. It rose 66 cents from $23.63 to $24.29. It's been as high as $24.55 and as low as $23.27. Now that's a rise of 2.8%. In sterling terms, it closed at £19.32, that's up 31 pence, or a third of a pound, and in euros it closed at 22.62 euros, that's up half a euro. The gold to silver ratio fell as a result from 82.4 to 1 to 80.7 to 1. Now we did say at the start of this video it was a pretty uneventful week. The difference between gold's high and low was just $35, and the difference between silver's high and low was $1.28. This is what we said last week in our forecast. For this coming week, we expect or anticipate gold to trade between $1,900 and $1,990, which it did, and basically held towards the center of that range. And silver to trade between $22.50 and $24.50 again, which it did, except for a very brief movement when it moved by 5 cents into our outlier range. But silver did tend to operate within the upper quartile of our forecast. Looking at other financials before we focus more on gold and silver, Bitcoin's taken a bit of a tumble. It's down $1,452 at $25,714. In fact, we published a video yesterday in Finances Do Matter before this fall, where we believe cryptocurrencies to be heading, and it's not very promising. It's entitled Cryptocurrencies Doomed to Failure or Green Shoots Ahead, and we've placed a link below. Equities improved marginally, but broadly remained constant throughout the week, with the Dow Jones closing at 33,876, up 114 points. The S&P was up 16 points at 4,298, and the Nasdaq Composite closed at 13,259 points. That's up 19 points on the week. Now for those in the UK, we're now going to quote the FTSE index. Notice we've missed that off for quite some time, and we shouldn't have done really. And it closed on Friday at 7,562. Oils were lower. Brent crude was down $1.34 at $74.79. And WTI crude closed at $70.17, down $1.57. We've got this terrible feeling that we think that for a while now, oil is going to trade somewhere between $70 and $80, with the Saudis and others trying to get it up to that $80 level, and the rest of the market trying to push it down to 70. In fact, our view is it should be 50, but there we go. Dollar index stands at 103.55. That's down almost half a point on the week. Now, in terms of economic data announced last week, we saw factory orders and services PMIs, though in positive territory, lower than anticipated. Consumer credit for April came in at 23 billion, lower than the 26 billion for March, but marginally higher than expectations. But the rise in initial jobless claims for weekend in the 3rd of June really provided some market excitement, as much as it was, in that this figure rose by a hefty 25,000 job losses, compared with expectations suggesting that perhaps the jobs market's thrust forward may now be in decline, thereby reducing the pressure on the Fed to raise rates on June the 14th. I said job losses, I should have said an increase in unemployment claims, basically. This coming week will be quite pivotal for the next couple of months to come. On Tuesday, we have the CPI figures, another name for inflation, and they're expected to be quite lower for May than they were in April. If this proves to be the case, then the FOMC making its interest rate decision on Wednesday is not likely to raise them, and most economists are expecting a pause in rate rises, with some, but not many yet, suggesting there may be no more rate rises for the rest of the year, and that could have a significant bolstering effect for markets. However, other economists believe slightly different, and I'll go into that in a second. But if the CPI figures are worse than expected, whilst we still feel that rates probably won't rise on Wednesday, they could potentially be increased in July, so watch out for that. Also on Wednesday, we have the Producer Price Index, which is expected to go negative. And on Thursday, retail sales also expected to be lower than the previous month. And we round off the week with consumer sentiment on Friday. So all eyes on Tuesday and Wednesday with follow through on Thursday. The fact that the market does not expect rate rises on Wednesday has tended to ensure that gold markets have risen these past 2 weeks. The CME's FedWatch tool is reading that there is a 71.2% probability that the Fed will not raise rates on the 14th. However, the same tool also reads that there is a 53% probability rates may rise in July. This is why Tuesday's CPI and Thursday's retail sales figures are important, not so much for the June, but for the July announcement. We have to say that if rates do go up in July, and especially if they went up by 0.5%, we take the view that that would start a major bull run in gold, because the likelihood of them rising any further would be almost zero, unless inflation really was out of hand. If there is an announcement that the Fed is happy with rates where they are, and they paint a positive picture for the future, and especially if CPI are down on Tuesday, and retail sales are down, then the bull run may indeed begin from Wednesday of this week. Many forecasters are predicting $2,100 gold after the July's FOMC decision. So we don't have long to wait, and it's very possible it could happen even sooner. Silver is also receiving bullish pressure, and like gold, could indeed benefit from no further rate hikes. Also, if a recession becomes less likely, we could indeed see silver jump forward at a faster rate than gold, as industrial demand would not be affected. In fact, enhanced. These next few weeks could be the most instrumental in the movement of these prices, even though we are entering what is normally a quiet period for precious metals. So with this in mind, we're raising our potential forecast for both gold and silver this coming week, but are keeping fingers crossed that they're not ruined by worse than expected CPI figures. We expect gold, therefore, to trade between $1,930 and $2,070, with $1,900 to $2,100 as outliers. And we forecast silver to trade between $23.25 and $26, with $23 to $26.50 as outliers. What do you think? Do share your thoughts. Before we go, just a reminder, we've placed a link in the description box below and the comment section for our Finances Do Matter channel. And meanwhile, we wish you a safe, enjoyable weekend and a prosperous, in fact, potentially, if it all goes right, a most prosperous week ahead.